Shifting focus to the region at large, Sub-Saharan Africa's economic growth is expected to improve to an average 4.2% this year from an estimated 3.8% in 2024. This according to Moody's, and as a result of a boost in investments in energy and infrastructure, despite ongoing social, political and environmental risks in some parts of the region. The U.S. company lifted its outlook for the region's credit fundamentals to stable from a negative. Ridle Markus, Sub-Saharan Africa Macroeconomist at Absa CIB, joins us now to discuss fiscal consolidation efforts that could help reduce the region's debt. Ridle, thank you so much for your time. Is this the year that prospects for Sub-Saharan Africa look brighter?
Yes, of course, you mentioned a country such as Mozambique, and we know that at the moment, Mozambique does have quite a bit of social tensions. And even this week, the opposition leader, Venancio Motlane, called for further protests ahead of President-elect Daniel Chapo's inauguration later this week. So Mozambique is clearly a concern, but it is one of the smaller economies in the region. You know, I do think the focus will be on the larger economies. I already mentioned Nigeria, South Africa, Angola, but the East African economies all the way down from Ethiopia, Kenya, Uganda, down to Tanzania, their growth outlook is also exceptionally strong, driven, of course, by large-scale investment. And in Uganda's case, oil. We're hoping that the oil story will start to emerge in Uganda. So East Africa is the prospects for growth there is fairly strong. But there is a risk that the La Nina impact could be felt in East Africa's agriculture sector, and we do know how strong the agriculture sector is there. But at a broader level, we are a few days away from President-elect Trump's inauguration, and we're obviously very concerned about some of the policies in the U.S. That could potentially be inflationary, to keep the dollar strong, could keep our currencies on the back foot. And if you combine that with the recent increase in oil prices, and I know that we are in the Northern Hemisphere winter, but oil prices have increased from mid-70s, and this morning it was at $81. You can already see that there's a concern here for fuel price increases, which along with the agriculture sector, as I mentioned, adverse weather conditions, poses further risks. I think Moody's is rightfully optimistic about the year, and we always are at the beginning of the year. Yeah. But there are a couple of risks here that could still, slow down the economic recovery.
Yeah. Well, I mean, South Africa's budget is actually coming soon, I think, next month. And I'm just wondering now, as we get into budget season as well, is there anything to note on what we should be looking out for, and what Moody's and the other ratings agencies will be looking out for in those budgets?
I think, South Africa is not my main focal area, but I am aware of the need for fiscal consolidation. And I think that is a central theme that comes through in the Moody's report, and also something that's been highlighted by other rating agencies, is that there's an urgent need for fiscal consolidation. We are sitting across the continent, not just in South Africa, with very high debt burdens. And, Moody's is warning, for example, that financing costs are still fairly expensive, compared to the pre-COVID period. So anyone that needs external financing will have to pay a little bit extra. The risk, of course, here is that, with weaker currencies, it just puts so much more of a burden on external debt servicing. And that is, of course, something that is a concern for a region that's highly indebted at this point in time, and where, quite a number of markets are already in default, while other markets is at a high risk of default. So, fiscal consolidation is a central theme. And I think what Moody's also does well is they link that to the risk of social discontent, especially those markets where we are going to see elections in. Because if you're going to cut expenditure, or at least constrain expenditure, while at the same time you focus on hiking the tax rates, then people will feel that in the pockets, and they might not be that happy. So that could flow into the kind of social tensions that we've seen before in markets such as Nigeria, Kenya, etc. So that's a concern.
And just to close off the conversation, Ridle, because I mean, even in South Africa, we did have, I think, later last year, one of the ratings agencies saying that the outlook for South Africa has been lifted, and obviously for now, Sub-Saharan Africa by Moody's. But are we expecting any shifts in terms of the actual credit ratings here rather than the outlook?
I think a lot of hard work still needs to be done, especially on the fiscal side. And I think some of the other rating agencies have already mentioned those risks. In South Africa's case, I think everybody is looking at how the electricity sector, and especially around load shedding, will perform, how the investment environment or climate will pan out. But again, that's a theme across the continent. It's not specific to South Africa. I do think, though, that many of our markets in the region will probably see not just a lifting of the outlooks, but possibly also being upgraded, as a lot of them are focusing on reforms. Moody's itself is mentioning the fact that there is a lot of reform momentum in markets such as South Africa that is very positive for the region. And I think that is why they lifted their outlook for the region as a whole to stable compared to negative previously.
All right. Well, thank you so much for your time, Ridle. Really appreciate the insights. That was Ridle Markus, Sub-Saharan Africa Macroeconomist at Absa CIB.